Let's get a view from a Greek bondholder. Paul Kazarian, CEO and founder of Japonica Partners, joins us now from Munich. Japonica says they are one of the largest private holders of Greek government bonds. Paul, great to have you with us this morning. I guess the first question, and we can get into more detail about your holdings in just a moment, but the news overnight, when you look at the proposal from the Greek government, what are your initial thoughts on that?
The initial thoughts, thanks Jonathan for inviting us, by the way. Initial thoughts are that it's a good step forward, it's a potential win-win, and I think the one key point you'd make is if they allow the accounting books or their real numbers to reflect the debt relief that they've already had, which is a kind of a common sense thing to do, that's a huge win-win for everyone, because the debt relief for the numbers are massive. All they have to do is account for them properly, and you'd see a very different debt number.
How different would the debt number be, Paul? And just to add to that, the accounting standards that need to be applied, does Greece have the skills, the personnel in place to even achieve that?
No, I think we had a summit in the past 2 days here in Munich, and we invited in 40 of the world's leading minds on sovereign debt. And the conclusions were, one, they need the EU assistance. Clearly, they need the partners' assistance, they need the IMF's assistance. They don't have the technical capability to calculate their own debt number. They just don't. They've had 4 major restructurings since 2010, and they still, as difficult as this to believe, they cannot calculate their own debt number. And preliminary estimates by our accounting firms that have looked at this is that a net debt, which is less financial assets, is somewhere in the range of 18%, at least it was last time we looked. It's a difficult calculation. They're going to need a lot of assistance, but they've had 2 years to try to calculate it, and they need help. They really do, and I think it's where Europe can step up to the plate here, especially Germany and the IMF, and help them, and the ECB, and help them calculate their debt number.
Do we really need the debt number? And I ask that, Paul, because when you look at the debt to GDP figure, it kind of doesn't matter, because when you look at the gross government financing needs, they're already very low. You look at the interest they pay on their debt, very low. The fact that 80% of the debt is in the official sector, which strips out some of that financial market risk. Why does it really matter so much that we get this debt to GDP figure that is an accurate one?
That's not to patronize you, but that's a very good question. It was one that was discussed over the last 2 days. And you'd have one camp that say it doesn't matter. And then literally a moment later, you'd have others saying, but they have to drive their revenue and they have to drive their expenses to either a 60% number or a 120% number. And then the ECB says, well, we can't provide collateral at these debt levels. And it's like, well, if the number's not meaningless, why do you all keep on repeating it? There were 40 of the leading minds, like in the world, that came. And at the end of the conference, they asked, does anyone believe the 180%, which is a face value number, is a real number? Not a single person in the entire group, and they were from all over the world, would agree that that's the number. They all know that's the wrong number. And if it's the wrong number, then don't let it drive policy and give them access to the ECB's quantitative easing program. It's unfair. They need some help here. I think everybody kind of has to get together. We had a multidisciplinary group, and that's what you need.
Isn't that good news for you, though, Paul, with skin in the game as a Greek bondholder, that if eventually the ECB does get on board, they get access to that QE programme, regardless of what happens to the economy, and actually regardless of what happens to the people in Greece, as much as a tragedy as that is? Guess what? 25% of people are unemployed in Spain as well. But if you bought Spanish debt in 2011, 2012, you're probably doing pretty well, regardless of what's happening on the ground in the Spanish economy and regardless of what's in the pockets of the Spanish people. You've got skin in the game, Paul. Isn't that good news for you?
It's good news for the Greeks. It's good news for the Germans. The last 2 years, unfortunately, and you don't want to look back, but the last 2 years at a minimum have been a slave, and it kept basically Greece in a debtor's camp. If you do any restructuring, if you had a mortgage loan, a house loan, when you restructure your debt, the lender allows the debtor to reflect the real value so they can grow. And what you've seen in Greece, and they don't have the technical skills, is that they've basically been kept in debtor's prison for 2 years, and they haven't been allowed to grow. There's 11 million people there, and they're really suffering unnecessarily, and I think they've finally seen the light, and they realize, let's just value it correctly, let's give them good state building skills, You know, let's show them how to calculate their debt number, but also how to calculate their right primary balance. It'll give the transparency, it'll give accountability, it'll give trust and confidence. This is like the fresh start. Greece needs a fresh start, and that was the conclusion. It really is all about a fresh start for them going forward, without saying it too many times.
Just to dig into where you're positioned right now, of course, there was a tender offer several years ago for about €4 billion worth of Greek debt. Can you give us an update on how much you did actually buy in the end?
Yeah, I mean, we are a private firm, and, we don't have to disclose anything, but what we have said, to kind of give a general sense, is at least at the time back when we done the tender, when we had reasonable information on who were the owners, we were, when we looked at the tender, one of the largest owners. And that was probably more than we should have said at the time, because obviously competitors look to gain knowledge from us so they can, people who do trade and we don't, because we're not a hedge fund. They look for that information for profiteering, so we probably shouldn't have said we were one of the largest, but it's accurate, and so we did.
Well, it's out there now. In terms of price that you paid, I think it was around 40 cents on the euro that was offered. Can you talk about the price that you were paid and whether you're in the money right now?
Yeah, I think we did also say, unfortunately, that we started buying when the bonds were about 11.50, and a large portion of what we bought, was in the teens, and now after the coupons, it's in the low teens. So yeah, it's been a positive. It's been a very, kind of a good, investment, to state it mildly. But, we're long-term investors. We're building, we build businesses. That's typically what we do. And we look at Greece as this performing opportunity that they really can have with this fresh start, which is what the conference came about. And we had Germans there, we had the government there, we had ECB, we had a lot of them. It really is. I think they're on the verge here of moving forward if they can just get the assistance, especially in the Ministry of Finance. That finance minister position is absolutely critical. And if they could get a credible finance minister who has skills in accounting, finance, and turnaround, it would be a world of difference for Greece and Europe. It is about the finance minister. It's all about that job, and that's kind of the first step forward here for state building.
Well, Paul, just because we're pushed for time, just the last question would be, you wake up Monday morning, let's say we've made progress and move away from Greek debt to your world and your real business for Japonica Partners, real businesses, real companies. Would you be buying up some of those Greek companies? And have you got any targets right now?
We have been looking, and we've all keyed it, quite honestly, very simply on if they have a credible finance minister who understands finance, accounting, and turnaround, we will support business in the country, but we need to know that they have a credible finance minister who has real global respect, and finance, accounting, and turnaround management. For us, it's that simple. We want a credible, internationally respected finance minister.
Paul, final question, yes or no? Is Sakalotos that man?
I mean, I'll ask, without being, kind of flippant here, does he have any finance, accounting, or turnaround management experience? I think the answer says itself without me having to comment.
Paul Kazarian, CEO and founder of Japonica Partners. Great to have you with us this morning. Look forward to having you back on the show. Thank you very much.